It's week 4 of our Accounting and Finance Business 600-day course, and welcome. This is our week 4 where we are completing the accounting cycle. We're doing one last assignment, number 3 for accounting, as far as financial statements and accounting transactions. And we're going over the closing process in problem 7 in chapter 3 on pages 137 and 138. So at this point in class, we're almost finished with our accounting section of our course. Next week, we'll talk about retail accounting and financial statement analysis, and then we'll get into the finance side of our course in a couple of weeks. So let's first of all take a look at our Blackboard and see what we have available to the students for this week number 4. Okay, as we're moving forward, the grades have been posted and the solutions have been posted for assignment number 2, and they're located in the assignments file. You'll see the assignment 3, which is you have a little bit more time this week to do it. You have until the week from Sunday, March 5th, to post your work for assignment number 3. So remember that no work is due this week. This Sunday, February 26th, the next work assignment for you to do is March 5th. Assignment 2 and the grades have been posted, and here are the solutions, and we'll look over those briefly in just a few minutes. Assignment 2, solutions and answers, and the postings of your grades for assignment 2 have been done. So right now in our grade center, we have 30% of the grade posted for our class, with another 70% to go. And that'll be reduced by 10% this coming week, March 5th, assignment number 3. So we're moving forward with our class. If any of you have any concerns about your grade or any questions, please feel free to contact me and ask me any questions. Also in week number 4 file folder this week, there's some graphics, and this I'll be going over in my review video in just a minute, of the closing process, what makes up the closing process of financial statements, and the final financial document that you need in the accounting cycle, which is the post-closing trial balance. There's an example of that. The post-closing trial balance just tells you which accounts are being moved into the new fiscal or calendar year. So there's some good graphics for you to review on our process closing out the accounting cycle. And also remember financial statements overview, how to take the adjusted trial balance and what accounts go into the balance sheet, the statement of retained earnings or equity, and the income statement. This is a nice graphic for those as well. But you're all getting pretty good at putting your financial statements together, and we'll have more practice on that this week in assignment number 3. So let's take a look at us briefly assignment number 2 and some of the solutions for that work. Remember, assignment number 2 was to take some information about an unadjusted trial balance, take that unadjusted trial balance and take that information and post it to a general ledger, and then do the adjusting journal entries for additional information about the accounting period, and then take those adjusting journal entries and post those to the general ledger. And then once that is done, prepare a trial balance or a trial balance of the final trial balance of the company, and then to take that trial balance and prepare the necessary income statement, statement of retained earnings, and the balance sheet of the company. Okay. And that's what I was looking for in our answers. Okay, so basically the key thing there was just being disciplined and getting organized on the process, the step-by-step process of which you all are probably beginning to realize in accounting. In this case, the general journal entries have already been completed and posted, and those are in the unadjusted trial balance. As you can see here, cash at $34,000, equipment $80,000, accumulated depreciation $15,000, and so on. And what I did is I took that unadjusted trial balance in the problem and posted those into each of the general ledger accounts that were given to you. Then I went ahead and did the adjusting entries, and which all of you did very well on. adjusting entries for taking a prepaid of insurance into an insurance expense, the adjustment of inventory and supplies used for supplies, the depreciation on equipment, the depreciation on the professional library, the recording of revenue now going from unearned to regular revenue, the recording of billed revenue to accounts receivable, the recording and accrual of salary expense to a liability, and the rent expense as a prepaid that was prepaid rent now becoming an expense item. And those were the journal entries. And then you go back to the general ledger and post those adjustments. As you can see here, here's my adjustment to the tuition revenue, which brings up the tuition balance to $131,400. We started out with $123,900. Here's the depreciation expense, which there was no balance prior. We added the debit of $7,200, and there's the new balance, and so on. So if you were confused about that, some of us forgot or did not post these to the general ledger. Now, again, in the real world, this is all done by computer, but the process of this class is for you to understand that process that computers do in posting all these transactions to a ledger. And then once you have that ledger, you take every balance in the account and place it into a adjusted trial balance. And here's my adjusted trial balance for this problem. Notice the debits of $345,700 equal the credits of $345,700. And these are all taken from the balances that you've accumulated in the general ledger. And then from this adjusted trial balance, you prepare the various financial statements which have been provided for you. So again, if you have any questions or concerns about this process, please let me know. You're going to be basically doing the same thing in assignment 3. The only thing in assignment 3 is in assignment 2, I gave you the unadjusted trial balance and you had to do the adjusting entries. In assignment 3, I give you the adjusted trial balance. You have to prepare the financial statements, and then you have to do the closing journal entries, which completes the accounting cycle. And that's the process of assignment 3. So basically, assignment 1, we did journal entries. Assignment 2, we did adjusting entries and financial statements. Assignment 3, we do financial statements and the closing entries. And that completes the process of every business in the world, what they do every month, every year, in recording their business events. So that's what assignment 2 showed us, and here are the solutions to help you if you had any issues. And again, I urge you have a week to do, a little bit over a week to do assignment number 3. So take a look if you had some difficulties with this, review it. If you have concerns, please let me know, especially this weekend when we have some time. All right, now I'm going to show you a video explaining this closing process.
Cycle, as well as look at the closing process. To review the accounting cycle, consider that the accounting cycle simply is a way of describing how we capture transaction event data and move it through the accounting system to the ultimate preparation of financial statements. Okay. There are various steps in the accounting cycle. Ordinarily, we think about the first step being the examination of transactions and events and the preparation of a journal entry. Those journal entries are periodically posted to appropriate ledger accounts. From those ledger accounts, a trial balance can be constructed, and examining that trial balance may provide additional reason to consider the need for adjusting entries so that income is properly measured for the particular accounting period. Those adjusting entries would be prepared, recorded in the journal, and posted to the ledger. The ledger then provides a basis for preparing an adjusted trial balance from which financial statements may be prepared. Those financial statements may be prepared directly from the adjusted trial balance, or a worksheet might be used to facilitate the process, such as was illustrated in a previous module. Moving on to the closing process. As we consider the closing process and consider why is this necessary, it's important to recall that accounting information is for periods of time. Income statements, operating statements reflect revenues and expenses for a particular period of time. And so what we have in the ledger are accounts that reflect revenues for the period, expenses for the period, and so forth. That information needs to be closed out before you begin another accounting period. In other words, the revenue accounts and expense accounts need to be reset to zero so that what will be captured in the ledger going forward is information about revenues and expenses for the next accounting period. So I say on the slide that we need to update the retained earnings account in the general ledger to equal the end of period balance. We do that by periodically closing our revenue and expense and dividend accounts. That is, we zero those out. The revenue and expense and dividend accounts are called temporary or nominal accounts, in contrast to the balance sheet accounts that are referred to as real accounts. So let's look at the closing process. You could think of this in steps. We could first think of closing the revenue account. We might, in the closing process, introduce another account called income summary. Essentially, that's a corral where we're going to gather up all of the information about all revenues and expenses. It's not a financial statement account at all. It's just an account that is used temporarily in the closing process. Similarly, we would close the expense accounts to income summary. And once that's done, the balance of income summary would reflect the amount of net income for the period that's then closed to retained earnings. Additionally, we would need to close the dividend accounts. So let's look at this in journal entry form. Here on the screen is an example of the first entry, closing revenues. Revenues have a credit balance. To close them, we'll debit revenues and credit income summary. At this point, we'll have $32,800 in the income summary account reflective of the total revenues. The next journal entry reflects the closing of the expense accounts. Because the expense accounts have debit balances, we need to credit them to close them or zero them out, and in turn, debit income summary for the total of the expenses, $30,200. Now comparing, you see there's $32,800 that's been credited to income summary for all of the revenues, and $30,200 that's been debited to income summary for all of the expenses. That gives us a net balance of $2,600 in the income summary account. That corresponds to the net income of the business, and that is what is closed out then to retained earnings. So here I'm debiting income summary, $2,600, and crediting retained earnings in this particular entry. And notice now that would cause the income summary account to have a zero balance. That would cause the expense accounts to all have zero balances. That would cause the revenue accounts to all have zero balances. And the retained earnings account has been brought forward to its then current balance reflecting the end of year condition. We also, though, need to consider the dividends, which are closed to retained earnings. Retained earnings over time is the undistributed earnings of the company. So here I'm crediting dividends to close that temporary account and debiting retained earnings. So to review the process then, this slide may prove helpful. Here's our revenue accounts that I'm debiting $32,800 and crediting income summary $32,800. I in turn credit all of the expense accounts and debit income summary. Then in turn I close the income summary account to retained earnings. Lastly, I'll close my dividends to retained earnings. That information then gives me a basis for preparing a post-closing trial balance. Now the only accounts that remain would be assets, liabilities, and the equity accounts, the end of period equity account balances. So a post-closing trial balance reveals the balance of accounts after the closing process. All the revenue, expense, and dividend accounts have been swept away or zeroed out. This simply demonstrates that the accounts are in balance. It is not a formal financial statement. Here's an example for England Tours Company after the closing process. Note that each of those accounts is a balance sheet account. Total debits are $65,000, total credits are $65,000. I'm fairly confident I've successfully completed the closing process. Lastly, I would like to close this module by asking you to consider computerization. First of all, computerization can do away with the need for the closing process I've just described. A number of accounting software programs are based on database logic that will maintain revenue and expense information indefinitely. And so rather than needing to close and restart revenue and expense accounts, it's sufficient to simply query the database for the period of time of interest. So one could say, give me the information about revenues and expenses for the period January 1, year 1 through December 31, year 1, or January 1, year 3 through December 31, year 3. It's not necessary that you restart the accounts at each particular period, given the robust character of a sound computer-based accounting system. Financial results for almost any period of time can be created, and the closing account becomes far less relevant.
Okay, here's a problem I've selected out of our textbooks to show this process that this professor was just talking about. Remember, assignment 1 was to do the journal entries and create a trial balance. Assignment number 2 was to create taking an unadjusted trial balance and do the adjusting entries and prepare the financial statements. Assignment number 3, which is this week, due March 5th, is to take the adjusted trial balance, prepare the financial statements, and then do the closing entries, and finally the post-closing trial balance, which completes the steps of the accounting cycle. So that's what we're doing here. And here's a problem very similar to your assignment that it allows you to practice it. And if you'd like, they could look at how I did it. Here's the adjusted trial balance of a company called Tybalt Construction. There's all the accounts, cash through expenses, and their adjusted trial balance. Then we're asked to do a variety of things, or two things in this problem. Prepare the income statement, the statement of retained earnings, and the classified balance sheet. The classified balance sheet for this company, and then prepare the necessary closing entries to close out the year. So a couple of things are different in this problem that we haven't done before. First of all, financial statements are about the same, except we're now going to do a classified balance sheet. The definition of a classified balance sheet is to put the assets and the liabilities in their liquidity order. Current assets, current liabilities, long-term or plant assets, and long-term liabilities. That's what a classified balance sheet is. It's breaking down some of those assets and liabilities into how old they are. Current is usually 1 year or less, long-term over a year. And that's what a classified balance sheet is. And we'll take a look at that in just a minute. So that's the problem that we're looking at. We're given the adjusted trial balance. We now take all those balances and prepare the necessary financial statements, and then close out all the temporary accounts, revenue, expense, and dividends, eventually ending up in the retained earnings account. Okay, remember I showed you in week 4, we have those graphics that show you the closing process and the financial statement, excuse me, process out of the adjusted trial balance. And here's those financial statements. Now, the difference also in this problem is you have to put in and break down all the various accounts. They're not given to you. You have to complete the financial statements. So here for Tybalt Company, here's their income statement. As you can see, they made a profit of $4,300. And here are all the balances in the adjusted trial balance for service revenue, rent revenue, interest revenue, all the revenues, expenses, all the expenses, and then the net income. Then also the statement of retained earnings. We started out the period of the year, balance of the prior year was this. We add in net income, we subtract out dividends. That's the balance of retained earnings at the end of December 31st of this current year, 1027. And that leads into the final statement, the balance sheet, where as you can see there under equities, there's the retained earnings balance of 1027. And then notice this is the designation of a classified balance sheet. Please note this. Every company does this. It's very important to understand, to put this information out there to your investors, to the markets, of showing what are your current assets. Assets with a life of less than 1 year, cash, supplies, prepaids. Your plant or long-term assets, equipment, less depreciation. Building, less depreciation. Land, and your total plant assets. So the total long-term assets, or in this case, the plant assets, plus the total current assets gives you your total assets of the company. Same thing with liabilities. We have current liabilities, liabilities that have a lifespan of less than 1 year. Payables, accounts, interest, rent, wages, property tax, and then that unearned revenues that's been paid to us in advance that we have yet to actually provide. Total current liabilities, $40,400. Then we have long-term liabilities, one account, note payable. It's due in over a year, $60,000. So the classified balance sheet breaks down assets by current and long-term, liabilities, current and long-term. That's what I want you to do in this assignment 3 for this week. Prepare a classified balance sheet. And then equity is pretty much the same, common stock and retained earnings. So the combination of total liabilities and equity gives us 218.1, which we know is right. It matches the assets. So we've taken that adjusted trial balance and now prepared the financial statements. Everything looks in balance and correct. And then we prepare the journal entries. And this is what you have to do in assignment 3, and this is what that gentleman was talking about. Notice all the revenue accounts with credit balances on the adjusted trial balance are debited, and those total revenues are credited to that account income summary, which is just a flow through account to close these accounts. The income summary account is debited for all the debit balances in the expense accounts, which are now credited, and they are now zeroed out, 110,800. Notice the difference between income summary for revenue and income summary for expenses is the net income that we just calculated on our income statement, $4,300. So we close out the income summary account to zero that out, and it all ends up as a credit to retained earnings. And then the retained earnings are also used to close out the debit balance in the dividend account, 13,000, and then it goes into the retained earnings account. So notice when we go back to our statement of retained earnings, it has all that information. Net income is increasing retained earnings, dividends is decreasing the retained earnings, and these are the journal entries to provide that information to do that, get those balances. The closing entries, you will be required to do this for your assignment number 3. And then the last step is to do the post-closing trial balance, which is to list all the remaining account balances left on your financial records. And that would be all the asset, liabilities, and the 2 equity accounts, stock and retained earnings. Notice the post-closing trial balance will have no revenue, expense, or dividend accounts because you've closed those out in the process. So this is problem 3-7A on pages 137 to 138 of your textbook that you can use as a template or a review of this process that you have to do in assignment 3. Again, going back to our Blackboard account, if you go to week number 4, here's that tab, closing processes, and here's those solutions that I just went over for problem 3-7 in chapter 3, the closing process. Here's those solutions that I just went over if you want like to review them. And then here's what we did in those graphics that we saw a little bit earlier. And here's the example of what the post-closing trial balance will look like. Not for this particular problem 3-7, but what it looks like. Notice you see only asset, liability accounts and equity accounts retained. In this case, it's capital, but you don't see any revenue, expense, or dividend accounts in this trial balance. And that's what I'm looking for as your final part of your assignment. And so now let's take a look at that assignment. Okay, assignment number 3 is taking an adjusted trial balance and preparing a few things. Here's the lead sheet of the assignment, which represents 10% of your course grade. Using the worksheet, the Excel sheet that I've provided, and we'll look at that in just a minute, with the adjusted trial balance for Rink Rats Incorporated, prepare an income statement, a statement of retained earnings, and a classified balance sheet. Note the retained earnings account balance was $25,650 of the prior year. So that's the balance coming forward into the new year for your retained earnings statement. Then I would like you to prepare the journal entries for closing the books and the post-closing trial balance for this company. Okay, here's the worksheet I provided you to download and do your work on for this problem. So you download this and then put your work together and then post it back to your Blackboard Grade Center. So here's the adjusted trial balance for the Rink Rats Incorporated as of December 31st. There's all the, notice the retained earnings has an ending balance of $25,650, which is carry forward from the prior year, which you'll be adjusting in your closing process. But here's all the accounts. So then you are to take the necessary accounts and prepare the income statement in this tab, filling all the information in and doing the arithmetic. Then you are to take that and do the retained earnings statement. Naturally, you'll have a balance coming forward, and then net income and dividends, and what's your new balance in retained earnings. That balance will transfer over to your classified balance sheet. Remember, I haven't set this up. You have to do that. Remember, break down current and long-term for assets and liabilities. Once you get the balance sheet done, then I want you to close out the temporary accounts, revenue, expense, and dividends in a journal entry here to income summary. And then once that is completed, update the trial balance to the counts that remain going forward into the next business cycle year for the rink rats. The only accounts in your post-closing trial balance will be asset, liability, and equity accounts. No revenue, expense, or dividend, because you've closed all those out to the retained earnings. So those are the tabs. So the tabs you have to complete are the income statement, the retained earnings statement, the balance sheet, the closing journal entries, and the post-closing trial balance. Complete all those, save them, and post them to Blackboard. You have till Sunday, March 5th to do that. All right? You got plenty of time to review this process and complete it. Then once we do that, we have our video next week on Tuesday, where I will review chapter 4, talk a little bit about retail, and talk a little bit about accounting for retail businesses, which is a little bit different than service or manufacturing businesses. And then we'll go forward into our week 5 work next week with chapter 4. But that's your work to do this week. Okay, that's our week number 4 work for this week, the completing the accounting cycle. You have that work due a week from Sunday, March 5th. If you have any questions or concerns, please let me know. Many of us in this class are doing excellent work. Some of us are struggling a little bit, so please review those solutions to assignment 2. Make sure you're up to speed on that and to go forward into our completing the accounting cycle with this week's work. And then we start in retail accounting next week in week number 5. So thank you, everybody. Have a great weekend. I'm here all weekend if you have any concerns. Thank you for all your hard work, and we'll see you next time. Adios.